What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw a continuation of the strong bounce across the board in the indices, and it's starting to look like Santa Claus is coming to town. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up exactly 1% and we did see price action closing back over all of our moving averages, so we're definitely seeing bullish price action, and we did regain the full bull trend on the daily chart by 1 penny. The 5 EMA is now over the 13 EMA by exactly 1 cent, and we are now seeing the full bull trend with the full bull price action, and it's starting to look like this gap up and run open is an island reversal on the price action that we had on December 20th. So when you start seeing impulsive price action in a bull market, it's more than likely the start of another bull cycle. Remember, SPY has gone absolutely nowhere for 2 months now, so the next time we get a breakout, it should be a very impulsive breakout. Our breakout levels will be above SPY levels of 470, with price targets up there at 477 and 483, and then the bearish breakdown would be a close back down below 453 and 450. 453 is becoming a stronger support level because it is a positively sloping support trend line, but we still have the most critical support down there at 450. Remember, if at any point this turns into a bull trap and price action closes below 450, we're very likely getting that full-blown correction to close the gap down here at 436. But right now, there's not too much reason to talk about the bear scenario when you're getting strong bullish price action and regaining the bull trend on the daily chart. Remember, we never lost the bull market on the weekly chart, so this is still a macro level bull market, and we're very close to getting the Santa Claus rally, which officially starts next week and will last going into January. So seasonality and price action and trend all favor higher prices in SPY. So stay the course and continue to stay objective as long as we're above these critical support levels. SPY critical support is now down here right around 463, 462, and 460. And as long as we're above 460, we can still maintain this bullish price action. If we start breaking below the 50 EMA, be a lot more cautious because we're more than likely coming back down to close the gap at 455 or testing support at 453. Jumping over to the NASDAQ 100 triple Qs, you can see we also had a bullish price action day going up 1.22%, and the price action is back above all the moving averages. The triple Qs don't have the full bull trend just yet, but they are very close to gaining the full bull trend with just a couple more days time. Now the bullish price action breakout for the triple Qs will be a breakout above 395 and 396, and we still have strong resistance at 401 with price targets at 410 and 415. So the triple Qs are looking very bullish above 387, and if we do break down below 387 at any point, you're looking for support right around 383, 379, and 374, with the most critical support level at the trend line right around 371.5. As long as we stay above this support trend line, we're still in a macro level bull market. And right now you can see on the daily chart, we're very close to regaining that full bull trend, which means we could still see a new all-time high before the end of the year. Jumping over to the Dow Jones, you can see a very similar story across the board with the Dow Jones up 0.7% today. And you can see the Dow Jones is starting to close that gap above, but it's still not completely closed. The Dow Jones will close that gap at a price target of 358.3. And then we still have resistance right around 360 and the breakout level right around 361. Now, if the Dow Jones can regain this full bull trend and break out above 361, we should see a new all-time high with a price target up there right around 372 with resistance at the previous all-time high at 365. Critical support is down here right around 355, 354, and 353. So we still have a ton of support about $1 apart. If we lose those support levels, we could come back down to 351 or the full gap close at 349. And that would be a very critical level to hold up above to prevent forming a lower low on the daily chart. So overall, all of the indices are starting to look very bullish going into the Santa Claus rally, which officially starts next week. So it does look like Santa Claus is coming to town. Jumping over to the Russell 2000, you can see we were up about 1% today, and we did get the bullish breakout back above 219. Remember, I'm calling this a bearish relief rally because we were in a full bear trend, and we clearly had a very impulsive move to the downside. So you can't trust this rally as far as going back into a bull market. So right now, the highest probability chance on the Russell 2000 is closing the gap at 228 and possibly testing resistance right around 232 and then getting rejected for another leg lower. If at any point price action closes the gap and breaks out above resistance at 232 and 234, it will instantly start looking a lot more bullish. But right now, we want to give benefit of the doubt to the Russell 2000 bears because this is clearly in a bear trend and it's clearly bearish price action. And yes, the counter trend rally will be impulsive, so it will be a bull trap. Don't get overly bullish once we break through and close these gaps because we could see more legs lower. Wait for that confirmation breakout above 232 and 234. So right now your risk level on the Russell 2000 is right around 217 and that full gap close at 213. And if at any point we start breaking down below those support levels, we could still come back down to 207 and 205. On the Arkk ETF, we were down 0.11% today, and intraday it did look like Arkk was trying to break out, and it would have been a bullish close if we did close back above 99. However, that level is clearly acting as resistance, and that's why I told you, like on the Russell 2000, to not trust these counter trend moves. Remember that Arkk is still on a bear trend, so you will see bears shorting at resistance, taking advantage of the bearish trend, because I always tell you the trend is your friend, and these have downward trends in them. So Arkk is not out of the woods until it can get a decisive breakout back above 103 and 107. So there will still be bear raids on these ETFs until they can scare away the bears and send them back into hibernation. So watch that strong resistance on Arkk right around 99, and the support levels are still 94, 90, and if we break below 90, that will be a bearish breakdown, and we should see 85 or 81 acting as support. Now to the upside, look for resistance at 103 and 107, and we're going to start looking a lot more bullish if Arkk can break out and close above 107. On the VIX, we were down over 11.4% today, and this is definitely the signal that Santa Claus is likely coming to town. Remember, I told you the next time the VIX closes below 20, it should signal that we're going to see that Santa Claus rally because we no longer have a fearful market that's panic selling. So we're more than likely going to see the selling volume drying up and see a very low volume melt up as long as the VIX is trading below 20. Remember, if at any point the VIX breaks out back above 20, just be more cautious. It doesn't mean we can't go higher. It just means it's going to be a more choppy market. If the VIX closes back above 25, you're looking for that full-blown correction, but you can clearly see the VIX price action back below 20 is favoring the bull rally for the Santa Claus rally, which tells us we're more than likely going to see that low volume melt up to finish out the year 2021. On Bitcoin, we're currently trading right at 49,000 and we're starting to see a bullish breakout. We're back above the 20 simple moving average and we're very close to breaking out back above the resistance trend line, which is just a couple of $100 higher. The official bullish breakout will be back above the 50 EMA at 53,000, and then we could see Bitcoin getting back on the bull. Right now, it looks like Bitcoin could have formed the bottom right around 46,000, so that will be a critical support, and we still have critical support below that at 44,000, 42,000, and 39,000. If at any point we break below 39,000, Bitcoin is very likely going into a bear market. So right now, watch for that breakout to be bullish above 53,000 with the first early warning sign that we're going back on the bull above 49,300. And below that, we're getting bearish if we start breaking down below about 39,000. On Amazon stock, we are up 0.36% today, and we did see Amazon closing back above 3,400 for the second day in a row. So it does look like we had a strong support level down here at 33.11, and we're starting to get confirmation of a bounce off that level. However, we don't know we're going back on the bull until Amazon can get back above about 34.45 and break out of the resistance trend line right around 35.46. So if you want to wait for the bullish confirmation breakout, you need to see breakouts above those levels. Otherwise, watch support to the downside at 3,400, 33.11, and if we break down below 33.11, we're likely coming back down to about 32.40 or 31.85. On Tesla stock, we had a very bullish day today, going up about 7.5%, and we did see Tesla closing back above that critical resistance level at $1,000. The next resistance will be the 20 simple moving average right around 1020, and above that you're looking for the resistance, trendline resistance right around 1120. If we can break out back above 1120, we're very likely going to see Tesla trying to get back to a new all-time high with the very strong resistance level right around 1240, and above that with the price target at 1412. Now to the downside, we still do have a gap that will fill right around $943, and below that we have strong support at 900. If at any point we lose support at 900, you're looking for the full gap close of support at 843. On Apple stock, we were up just over 1.5% today, and Apple is looking very bullish yet again. Remember, we still have the strong bull trend and the price action still above all the moving averages, and we did test that resistance level at 176. Above 176, you're looking for a breakout above the previous all-time high at 179.5, and above that, we have the price target up there at a brand new all-time high at 188. If at any point we break down below critical support around 169 to 170, we could come all the way back down to about 162. So watch that very critical support level, and as long as Apple is in the full bull trend with strong bullish price action, you do want to continue to point your eyes up there to that price target at 188. On the financial sector, we are up almost 0.5% today, and we're still below the 50 EMA and the 20 simple moving average, so we still have a bear trend. If at any point the financial sector could get back over that 50 EMA, we could reverse the bear trend and try to go up there to fill that gap, which would be a bullish breakout. There's still the possibility this is an island reversal, so watch that bullish breakout back above the 50 EMA. On the industrials, we have a very similar story as the financials. We need to get back over that 50 EMA with the potential this is an island reversal, and we need to see that bullish breakout above resistance. On the healthcare sector, we were up 1.17% today, and we still see a very strong bull trend with very bullish price action, so we could still break out to another 52-week high. The energy sector was up 0.64% today, and it's very close to going into a full bear trend. You need to see the energy sector getting back over that 50 EMA, and then you can start getting a lot more bullish on the energy sector. So jumping back over the S&P 500, it's definitely looking like we're going to see that low volume melt up Santa Claus rally, which starts early next week. We more than likely are already starting the Santa Claus rally as long as we stay above this 20 simple moving average and can maintain the bull trend. So watch that strong support level right around 462. And remember, if we start breaking down, you want to watch that gap close and of course the very critical support trend line. If you're staying objective, you're still a bull in this bull market because we're still on a macro level bull trend and we're still well above critical support levels. There's no reason to get bearish until we break through a critical support and lose the bull trend, and we just haven't seen that happening. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts, which only trades the ETF TQQQ, and you get all of your buy and sell alerts directly via email and text message. Bank Trade Alerts is absolutely crushing this market, and you can see that we're currently up over 9% over the past 3 months. I think 2022 is going to be an even better year for Bank Trade Alerts, so if you still haven't tried Bank Trade Alerts, now could be the best time to become a bank member. You can find out how to join Bank Trade Alerts and more details by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.